Yes, welcome to video lesson 4, and in this lesson I'm gonna show you how to deal with chart of accounts. But before we get to that, I believe you practiced how to switch from single user mode to multi-user mode with QuickBooks. I also want to believe that you practice how to add user accounts. In the previous lesson, like I had given you a practical exercise, I believe that you added 3 more user accounts and you deleted the user accounts that you had. Now, so what we're gonna do today is I'm gonna walk you through the chart of accounts, and we're going to look at different charts of accounts and how they operate and how they work. Then from there we're going to proceed to something else. So let's get started. So how do you access chart of accounts? It's simple. You go to chart of accounts and then you click chart of accounts, and what you see here is a list of accounts that you have here, and they have all different functions and different purposes, and you can add more and more accounts. So we're gonna walk through these accounts and let's discuss them. Now, first of all, this is what you call the account type. What you notice here is this account name column, and what we have here is the account type, and what we have here is the currency. Now notice that our current currency is Kenyan shillings. Why? Because we changed that. We changed our home currency and activated the Kenyan currency. So what we have here is the Kenyan shilling, and then here we have balance total, and yeah, so those are the columns that you have. So now let's go through these accounts and let's discuss them. First of all, the first accounts that you see here, and these are the ones that always lead, they are your bank accounts. Remember, when we created this company file, we created Kenya Commercial Bank as our account, and that's why it's appearing here. This is where you deposit your money, and it doesn't have to really have a very specific name. You can give it whichever name that you want. You can even call it checking an account. Okay, you don't have to really give it a very specific name. So what we're gonna do right now is let's edit this. So double click it. Let's see whether we can edit it. All right. Okay. Let's see whether we can edit it. Let's see. I'm gonna right click. Let's see whether we can perform some changes. So select the account. I will come back here to activities. I want to see whether we can edit the account right from here. Come to the account. Let's see whether we can edit the account. All right, here we are. So we can edit the account. It doesn't have to be what we entered. You can always edit your account. Let's write it in small caps. We're gonna have Kenya Commercial Bank. Remember, for most of the things you can always edit in QuickBooks. So we're going to have Kenya Commercial Bank. Kenya Commercial Bank, this is a bank account, and this is where we're going to be doing our deposit. Description, you can give it a description if you want. Bank account, you can enter the bank account or you can leave it without bank account. These are just miscellaneous information that you're required to add, but you can just leave them as they are. I'm gonna close, and there we are. It's now Kenya Commercial Bank. We're also going to change this bank account. We're going to call it Equity. So you select the account and you come here down to account. You can see this button right here. You click account and then you go to edit account. So I'm gonna click edit account, and let's call it Equity Bank. So we call it Equity Bank. There you are, Equity Bank. Equity Bank. And let's delete that. This is Equity Bank. There you are. We can have the account number. We can just leave it. It's just extra information that you might want to add. So you can click close. There you are. So you notice that like I mentioned before, all your list or charts of account, they are listed in a very logical way. If you assign them numbers, they're gonna have numbers. If you don't assign them numbers, then they're gonna be arranged in alphabetical order. And as you notice, this bank account that you created, they are not assigned to numbers. Okay, so the ones that QuickBooks assign numbers are the default accounts into your QuickBooks system, but the one that you create, especially the bank type, they don't have numbers. So we have the bank type, and this is basically your checking or the bank accounts. It could be savings, it could be checking account. It really depends on what you choose or what you decide the account to be. And then right below it, we have what you call the accounts receivable. So the accounts receivable, all the invoices you've created but haven't been paid or settled yet, they are indicated or they are shown in the accounts receivable. Okay, so that is the purpose of the accounts receivable. So we have the name of the account is account receivable, and the account type is also called the account receivable. So this is the account for all the invoices that you have issued but they have not been paid. So that's where all that money comes from, or rather comes into. And then you have the current asset. Of course, when it comes to assets, we have the fixed asset, and we have current asset. We know that current asset, they are the ones that you can easily convert into money, and this includes your inventory. And that's why you notice your inventory, the account type is a current asset. Okay, your undeposited funds, okay, the account called undeposited funds, the account type is the current assets. Now all the cash that you receive from your clients or from your customers, they go into a deposited funds, and you can always transfer them from a deposited funds and then into a very specific bank account. We shall learn how to do funds transfer. So remember, in the company setup or in the company preference, where we said that we want the undeposited funds to be the default account for all the monies that we receive from our customers. That's why you have this account here. So any payment that you receive, it's going to be deposited into undeposited accounts. So undeposited accounts, that is a current asset account. And then you have this account type called inventory asset. Now of course, all your inventories, that includes stock and other inventories that you have, they go into current asset because you can easily convert them into cash. Then we have what you call the fixed asset, and these are the long-term assets, and this includes things like the motor vehicles in your company. You don't sell them, you use them, they help you run your business. So this includes things like furnitures, equipment, your business premise, motor vehicles, and all those other assets that they are not easily convertible into money, or rather you use them for your business operations. So furniture and equipment, that is under fixed assets, right? And then we have accumulated depreciation, that is still under accumulated depreciation, yes, that's still under fixed asset. Then we have what you call account payable. Now, account payable, bills, this will reflect all the bills. Okay, bills entered reflect all the bills entered will reflect in the account payable. If you let's say if you make if you have bills to pay, all those bills will reflect in the account payable. And then you have payrolls. Now, payroll liabilities, this is current liabilities, and things like taxes that you have to pay. So all those comes under current liabilities. Now, remember, when it comes to liabilities, we have current liabilities, and we have current liabilities. They are also called short-term liabilities, and then we have long-term liabilities like loans and all that. So payroll liabilities, that account is under current liabilities. And then you have sales tax. Let me point out something here. Payroll liabilities, think of in terms of if you're a company, you make contributions for your employees. This could be NHIF, NSSF, and all that. Those are payroll liabilities, and they come under other current liabilities. You also have sales tax payable. Of course, your employees pay taxes, and you tag those taxes on the behalf of your employees, and the taxes are remitted to Kenya Revenue Authority. And so sales taxes, these are current liability. They are liability to your organization. And then you have what we call equity. We have what we call equity. We have opening balance. This is money that you have in your company. Opening balance, that is an equity. Partner one drawers. Now, let me explain this. If you withdraw money from your account, if you withdraw money from your business account and use it for whichever purpose, whether you fuel your car or whether you buy some food stuff, for whatever reasons, those ones, they will come under a partner drawers. This is the money that you withdraw from your business to do whatever you want to do, whether you buy food or that kind of stuff. So that is equity. The money that you have in your business when you open the business, or the money that you're pumping, that is opening balance equity. So that cash is what we are calling equity. Any money that you withdraw from your company, we also, or from business, we also call it a partner or withdrawals. Now, if you contribute some cash into your business, that is also considered as equity. So if you pump money into your business, then we also call that one equity. So in the equity account type, you can create parent account, actually called owner equity. Then under that account, you can create some sub accounts. One, you can call it withdrawals, and then the other one, you can call it contributions. That way you have owner's equity, and in the owner's equity you can have withdrawals, and that's where the money you withdraw from your business to do whatever you want to do, whether you buy food stuff or fuel your car, that's where that money will reflect under withdrawals. And then you can have a sub account called contribution, and that's where the money you put into your business, right, will reflect. So let's why not do that right now, and then you're gonna see how that one works. So let's create owner's equity right now. So to do that, I'm gonna go to accounts. We're going to create a new account, in this case equity account. So let's click new, and then we're going to go to equity, right? And then other account types. sorry, go to continue, and then here we're going to call this account, it's of course account type is equity. Then let's call it owner equity. Let's call the account type owner's equity, right? So this is a major operant account. It's called owner's equity. Owner's equity. So that's the account. Then you're going to create another 2 small accounts under owner's equity. So I'm gonna activate all right, no, you just let me see, sub account of, okay, let's do this. Let's call this one let's call this account want this one to be a sub account of a big account. So first of all, let's create the big account. So we call this one let's call it owner's equity, right? And then you're going to create 2 small accounts or sub accounts. Owners, let's see, owners equity, right, owners equity. So that's a major account, and then that's it. So we save and close. So we have this account here called owner's equity. Now we want to create a sub account, that is small accounts under owner's equity, where we're going to have drawers or withdrawals and contributions. Now to do that, I'm gonna click actually just come here, account, then I'm going to create new account. It's still under equity. I'll click continue, and then I'm going to call that account drawers. Okay, you as the owner of business, you might want to draw some money. It's basically your own money to fuel your car or buy food stuff or for whichever personal use. So we're going to call this one drawers. All right, and it's going to be a sub account of the major account, which we are calling owner's equity. So you activate sub account of, and then you come right here and click this drop down list button and you pick owner's equity. So this is be a sub account of owner's equity, and then you click save and close. So what you notice is we have owner's equity, and below owner's equity we have a sub account called drawers. Let's create one more sub account, new, it's equity, click next, and then this is going to be your contribution, the money. If you pump any money into your business, that is equity, and it comes under contributions, right? And then it's going to be a sub account of owner's equity. So click right, activate that checkbox, click here, and you pick owner's equity, and then you click save and close. So there you are. So what you do have here is owner's equity, and in owner's equity we have contributions. This is the money that you pump into your business, and then we have drawers. This is the money that you withdraw from your business. So you don't have to, you can create any account type of your choice, and you can organize your accounts the way you want. Right here we have opening balance, it's an equity. We talked about that. If your business has a number of partners, you can have partner withdrawal. This is if one of your partner withdraw money from your business, comes partner one withdrawal. We have partner one equity, the money they pump into the business is the same as contributions. And then we have partner two drawers. If second partner withdraws money, it goes to partner two withdrawals. Then you partner to equity, the money they pump to the business. So all these are under equity, and you can set up the accounts the way you want. These are the default accounts the one the system has created for us. But as you can notice, we have full control. We've added our own accounts. And then we have retained earnings. Any money that the business has generated and retained into the business, it's like we are plowing it back, then we call that one retained earnings, and that's still under equity account type. Then we have income. Now the income type of account, that's where we have the sales income. Any money coming in as a result of the sales that you made, it will go to sales income. We have sales, we have shipping and delivery income. If you charge your customers for shipping goods to them or delivering goods to them, then that's part of the income, because you sell the product, you charge them, then you charge for the delivery, then that's income. So that one will come under income. All right, let's see what else we have here. We have cost of goods. If you buy goods, okay, the cost of those goods, that will reflect in cost of goods, right? We have freight and shipping. It's still under cost of goods because you pay for shipping. When you buy from your supplier, you pay for delivery or you pay for shipping. So that one is that one comes under cost of goods. We have merchandise fee, product samples expense, so that's coming under cost of goods, sold purchases, resale items. Now then we have the expense account. For instance, if you do advertising, you want to advertise and promote your business, that is an expense, so to come under expense account. We have automobile expense, that could include that could include fuel or any other expenses associated with automobile. We have bank services, which again, this should be an expense. For instance, if you have bank statement, if you are charged for bank statement, then that comes under expense. We have computer internet expense. So all these are expenses. And then down here we have what you call ask my accountant, and ask my accountant is indicated as an expense. Now and if you are gonna need to consult your accountant and you pay for such services, then that's ask my account expense. It's gonna come under expense account. Now I want to point out a few things here when it comes to charts of accounts. Let's see. I want to point out something here. Let's go back to liabilities. I want to point out something on liabilities. But before we look at liabilities, I want to point out something here on accounts receivable. Sorry, accounts payable. And that is currently our accounts payable is 0. That's in the balance total because we haven't ordered anything, or we don't owe our vendors anything. So once you enter your first bill, QuickBooks will automatically create and add accounts payable for you on the chart of accounts. Currently we have accounts payable, so any transaction you make when you enter bills, that amount will reflect here on accounts payable, because this shows the money your business owe, right? So that's very important to notice. Now let's come to liability account. Where we liability account? All right. Liability, current assets, fixed asset. Yeah, liabilities, here we are. Now currently we have liabilities, we have current liability. Now we know that we have long-term liabilities, and in the account type liability, we have long-term liability, which show the money you owe, which are payable over 12 months or more longer period over time, like loans. Okay, so long-term liabilities, they are that money that you owe, and they are payable over 12 months or longer period of time. And then we have other current liabilities, which you can also call as short-term liabilities. It shows the money you owe, which are payable in less than 12 months, like taxes, salaries, and all that. Now, if you indicate that you charge sales taxes, QuickBooks will immediately and automatically create sales tax payable. We've seen that one, sales tax payable. This was created when we activated or we turned on the feature that we charge sales taxes. And because these are taxes, of course, we owe that money to Kenya Revenue Authority or whichever agency that you use in your country, then that one becomes liability. And this will be other current liability type. Now, as you can notice, we don't have long-term liability account here. And I want us to create a long-term liability here. And this includes things like loans that you have. It's a long-term liability. I'm going to show you how to create a long-term liability. Now, let me point out something that it's very, very important. Every time you make a car payment, let's say you got a car on loan, okay? Your business bought motor vehicle on loan. Every time you make that motor car payment that you pay in your loan, you should not and do not put that payment in the expense account. Yes, it is an expense, but it does not go to an expense account. That's a liability. Now, most mistakes people that make, most people make this mistake. You're paying for a car loan and you enter that payment in expense account. That should not go into the expense account. Instead, you should put it in the long-term liability account of your car loan or automobile loan. Currently, you notice that we don't have such account here, so we need to create that account. So why would you have to put it in the long-term liability or car loan liability or automobile loan account and not expense account? This is why you put that money in the car loan or automobile loan and long-term liability account type, because this will keep deducting the amount you owe for your loan. And so at any given moment, you can tell how much your automobile loan, how much is your automobile loan balance. Let's say that you got a loan, 2 million, and you bought a pickup, okay, for your business. That's a loan, and it should have an account called maybe automobile loan or car loan. And every time you make your payment, that money should reflect in that account, not in expense account. That way you'll be able to see progressively how much your loan is reducing. If you put it in expense account, then you'll never be able to track how you're doing and how you're faring with your loan payment. Okay, so you need to have a loan account. Now, something else that I want to point before we create that account, in your long-term liability, or in the loan, automobile, or car loan, you can also have money that you want to pump into your business, but you want the business to pay you once it fares well. It's like you are loaning your business some cash. This is different from equity. Equity, you put in money into your business. The business doesn't have to pay you back. But there are cases whereby I want to pump 1 million into my business, and I want the business to pay me back once it's in good standing. So that also goes in as a loan, because I'm loaning this business. Okay, and the business will have to pay me continually over time to clear that loan. So that money will come under long-term liability, and you can set it up as a loan, because the business will pay you back once it does well. Okay, so you want to be able to track the payments, and so you can create what you call capital loan. Okay, and in that account you have it track the money that you've launched your business, and how the business and the progressively or you want to track progressively how the business is doing in paying your loan. So when you create a loan account, it could be a loan you're paying maybe for a car or for a lunch you bought. It could also be capital loan, money that you pumped to your business and you want the business to pay you back, and that is totally different from equity. So I want to show you how to create that kind of long-term liability. So let's do it. To create that account, I'll just come here, down here, and I will create new account. Okay, here we are. At this point, we go to want to set a loan account. Now we're not going to go to loan. Okay, tracks the principal your business owes for a loan or line of credit. So you don't go to loan, you go to other account type, and then you click here because want long-term liability. So you come and click here, and then you look for long-term liability. Here it is. Okay, so you click long-term liability. Don't pick loan. Okay, you go for long-term liability, so you come here, other account type, and then you pick long-term liability. And this could be mortgages, it could be long-term loans, it could be all that kind of stuff. And then from there you click a continue. The long-term liability, we can call this one car loan. Okay, call it car loan. And that is it. You can create, you can enter description here if you want, or you can skip it. Just this is just for more information, so we're not going to enter anything there. So just click close and save and close, and now you have a long-term liability called car loan. So all the payments you make for your car loan, they should reflect here on the long-term liability. Now, I also mentioned that you can lend money to your business with the anticipation that the business will do well and they pay you back. And you can call that account capital loan. Okay, so let's do it. Let's create an account and call it capital loan. It's gonna be a long-term liability because your business will pay you back over time. It's gonna take more than 12 months. So let's do it. Come to account, go to new, don't go to loan. Okay, don't go to loan. You come here and you pick long-term liability. You click continue and then you can call it capital loan. Call it capital loan or whichever name that you want, capital loan, and that's it. And then you click save and close. So now we have two long-term liabilities here. Use this one when I'm doing my car loan payment. I'm gonna use this one when for the money that I pump into business, the money that I lend to my business, and then it's gonna track how that loan payment occurs. So that's very, very important. Now, something else that I want to point out, and this is called a credit card account type. We didn't activate the fact that you're gonna be using credit card, so we may not see credit card account type here, but we can create one if we want to. Now, I want to point out something here. If you're gonna be using credit card, you may need to create a credit card account. Now, let me point out one mistake that most people make. When they receive a statement, their Visa statement, their MasterCard statement, when they receive a statement, they enter it into the expense account. And that's really wrong. For your Visa or for your MasterCard, you need to have credit card account type. It shouldn't go to expense account, because the problem with entering such statement in the expense account is this: if you don't pay the entire bill once, you receive the statement. The next time you receive that statement, it shall include the previous balance you had, plus any other credit card or any other credit you might have had since the last time you made your payment. And so you're not going to have you're going to have erroneous or faulty or incorrect information. Because if you receive Visa card statement right now and you make your payment, because using credit card you make your payment and you don't pay everything, it will carry over to the next time. So if you enter that statement in your expense account and you didn't pay the entire amount, there's going to be a problem, because the next time you receive another statement, it will include the amount that you didn't clear in the initial payment. And when you enter that amount again in the expense account, it's going to create an incorrect report. So what you do is you create a credit card account type that will track your credit card payment. So you don't enter that. You don't enter credit card statement or Visa card statement into an expense account. You create credit card account that will track those payments, so you don't have incorrect reports. So how do you create a credit card? How do you create credit card account type? I want to show you that in a while, but not this. Once you create a credit card account, you're going to have an icon called Enter Credit Card Charges, which will appear on QuickBooks. Currently, if I minimize this, let's minimize that, let's expand this. Let's go to banking. There's nothing like credit card here. Okay, that icon does not exist, and the reason it doesn't exist is because we didn't create a credit. We turned off the fact that you're going to be handling credit cards. So the moment we create a credit card account type, it means we are going to be handling credit cards, and so we're going to have an icon appear here showing where we can enter credit card charges. So let's just do that and see what happens. So I'm gonna go back to chart of accounts and let's create credit card account. New. Sorry, like I said, credit card is not an expense. Okay, when you receive a credit card statement and you don't settle all your credit card bills and you indicate them in the expense account, right? You enter them to the expense account. The next charges you get, they are going to be added on top of what you didn't clear. And again, if you enter them in the expense account, you're going to have incorrect reports. So you want to create a credit card account. So you pick credit card and then you click continue, and the account type is credit card, and we can call it a Visa card or whichever name you can call it. MasterCard, doesn't really matter which name you use. It's not a sub account of anything. You can describe it here if you want. Just click save and close, and now you have a credit card account. It's called Visa. So anytime you receive credit card statement, you can enter those expense, and you're supposed to enter those expense on credit cards, credit card bank type or account type, not in an expense type. So that's very, very important. Now, if we close this or minimize, what you notice is you're going to have enter credit card charges. Okay, so it's good to QuickBooks to create this icon here, which was not there before, to allow you to enter your credit card charges, and that's where all your credit card charges should go. Your credit card, don't put your credit card charges on expense account. It is not supposed to go there. If you do that, you're going to get incorrect reports in your system. All right, so that is it. So we have a Visa card here. So now let's see. So that is it. That's what you have now. We don't have anything here because we haven't started doing any transaction. When we start carrying out any transaction, then you're going to have this balance, total balance. You get to see values coming in here depending on the kind of transaction that you carry out. So I'll wrap up this lesson by pointing out a few things. One, you can edit and create your own accounts in the chart of accounts. Two, all your credit cards charges should go under credit card type of account. Don't enter those charges in the expense account. Number three, you need to create a long-term liability account type. If you don't have it, like loans, car loans, or money that you pump into your business. And this is very important, when you're creating a long-term liability, if you go to account, new, don't pick loan. Okay, if you pick loan, you will not get the kind of you will not get correct financial reports. So you come here and you pick long-term liability. It's just how QuickBooks works. So don't pick loan, come here and pick long-term liability, and that will help you be able to track how the payments of your loans are faring plus the balance that you have. So don't make that mistake. You're creating a loan, account, then you come and pick loan, you come here and click continue, and then let's say you call it automobile, call it automobile loan. Now, so why am I telling you don't use loan? Notice it is regarded as current liability, a loan that is payable within 12 months. But when it comes to real loan, that is not the case. That's why I'm saying don't use loan, because it will be classified under current liability. What you need to do is you come to account, you go to new, you need to choose other account type, click here, and then you pick long-term liability, then you click continue, it will be listed under long-term liability. So that's very, very important. Make note of that. Do not create loan using this loan account type, because QuickBooks will classify that under current liability. So that's very, very important to note. When it comes to credit card, do not enter credit card charges or statements into an expense. Create a credit card account just like we have done it. That way you'll be able to have correct reports in your system. So that's very, very important. So to wrap up this lesson, I want you to do two things, right? First of all, I want you to add another account of your choice here so that you can practice how to add more accounts. And I want you to create credit card account, and I want you to call that account MasterCard. We create a Visa card credit card account type. I want you to create a MasterCard. It's in the class of credit card account type. I also want you to create loan or long-term liability account type, and you're going to call it, currently we've created two, capital loan and car loan. You're going to create another one and then call it a motor vehicle loan. Okay, be very careful. Don't pick loan as the account type. Go to other and pick long-term liability, and make sure that it will reflect the exact account type here. Notice that our car loan, it's indicated long term. Our capital loan and car loan, it's stated long term. It's not a short term. If you pick a loan, it will indicate itself in the QuickBooks as a short or other current liability. So create two accounts here, actually three. One, MasterCard, which the account type would be credit card, and then you create loan account, which the account type should be long-term liability, and you can call it motor vehicle loan. And then you create any other account here just for the purposes of practice, and then you see how that one works. In fact, for the motor vehicle, I want you to create two sub accounts under motor vehicle. One, you are going to call it a pickup loan, and the other one you're going to call it let me just show you. I'm gonna come here, just show you, and you pick long-term liability. Continue. You're going to create a major account called motor vehicle loan, and then you're going to go back and create a sub account of motor vehicle loan, and you're going to call that sub account, the first sub account you're going to call it a pickup loan, and the other one you are going to call it lorry or commercial vehicle loan. Okay, so your motor vehicle loan, it's going to have two sub accounts. One you're going to call pickup loan, and the other one you're going to call it commercial vehicle loan. That will give you a good practice on how to create sub accounts. It will give you a good practice on how to create long term liability account. It will give you enough practice on how to create credit card account type. So that's your assignment, practical assignment in this lesson. Get it done, and then I'll see you in the next lesson as we switch from handling chart of accounts. We're going to switch to something new. So get good at that. Make sure you have it right, and I'll see you in the next lesson as we dive into something really different.